Cardano Summit, hello. We've got a good panel for you today. This session highlights three different companies that are helping you, helping shape the future of financial transactions through USDA, a fiat-backed Cardano native stablecoin. You'll be hearing from Anzens, the issuer of USDA, Emergo, the technology provider that's utilizing their tokenization platform for easy creation and redemption of USDA. And we'll also be hearing from BitGo, a well-known uh, digital asset custody provider. So let's get started. So let's start at the top with the collaboration. So Anzens selects BitGo as USDA's custodian. And it really is a technical and partnership milestone to be able to integrate with BitGo's sophisticated technologies and systems. Tell us more about the integration and also how it helps benefit USDA users.
Yeah, maybe I can kick it off right off the start, where one of the biggest advantages that we had with selecting BitGo, besides their regulatory status within the US as a Colorado-based trust company, was the fact that they were able to offer us segregated accounts for each one of the users that we want to onboard onto the Anzens platform. And so for those of you guys that aren't super familiar with what segregated accounts are, when someone's onboarding onto Anzens in order to mint or burn USDA, they actually get a trust account set up in their own name. That's bankruptcy remote from an Anzens perspective as well as from a BitGo perspective because it's held in trust. So this basically enables it so that people can securely and safely store their fiat up until they hit the mint button, and at which point in time the funds rotate from their segregated account to our FBO account, and then we issue out the USDA on the back end of that. This is different than some of the other stablecoin models where you're basically funding the bank account of the issuer. They're holding that in an omnibus or a giant pooled position, and then they have to keep track of all of the reconciliations of all of the cash inflows and outflows. And this was the biggest advantage that we got out of BitGo, was the fact that that was all being handled by BitGo in a bankruptcy remote manner.
Yeah, I'll sort of jump in here, and I think you've explained our product better than I could, to be honest. Look, firstly, we're really excited about being involved in the project. We think it's a huge honor to be selected out of what is a pretty competitive space on the custody side to work with USDA. Like you said, we've been in the business for a long time, and what we bring to the table is an integrated technology layer that is regulated. We've been in the business for over 12 years. We built a tech stack that is battle tested and provides the sort of security and compliance that the stablecoin will need.
And so are we super excited to be working actually with BitGo. It's the collaboration and the overall usability of the product where the users and their assets, this was the immediate concern for us to make sure that the users' assets, the users' money, and the overall ecosystem remains clean. And we couldn't find a better provider than BitGo, specifically in the US markets. And we are very keen to be working with them and get USD out in the market soon.
Perfect. For those who are unfamiliar with the difference between qualified custodian and non-qualified custodian, what are some of the compliance and regulatory standards that BitGo adheres to? And how does that benefit, USDA users?
Well, where do I start? It's a pretty long list. And look, just to define the difference between what is a qualified custodian, and for anyone outside of the US, that basically means we're regulated. It's not a term widely used internationally, but we have to adhere to extremely strict guidelines and controls on how we secure assets on behalf of our clients. And we use this term, we have a fiduciary responsibility to store and monitor those assets in a very sort of compliant manner. We currently operate 5 different regulated entities globally. I know in this use case, you're facing a US-based, we actually have a license in South Dakota, not Colorado, and also in New York. From a European standpoint, we have a German regulated license under BaFin. We also have a Swiss license. We recently achieved approval in Singapore under MAS, And hopefully, fingers crossed and toes and everything else, we'll soon have a license right here in Dubai, monitored and regulated by VARA.
That's awesome.
Yeah.
And beneath, so the architecture had to be designed to meet like the rigorous demands of, integrating with a custodian like BitGo. What does that say about the underlying technology?
So our goal when setting up the Anzens tokenization plan was like safety and security first. So there's not that much challenge in issuing a token and burning a token. The challenge really comes in regards to like how do you actually secure the minting and burning keys? How do you have this set up in a way in which there's I would say a very minimal attack surface for people to come and be able to mint or burn, because at that point in time you're giving people access to a money printer. And in our integration with BitGo, we had our platform set up in a way in which the only way in which we're capable of minting or burning USDA is actually through internal money movements on the ledger of BitGo. And so this ensures that there is no way for us or any kind of attacking party to get access to the minting and burning keys on the USDA front. Because one of my biggest concerns was the fact that, like, if I was to sit on the minting and burning keys, or if anybody on my team were to do that, that's a potentially dangerous position to be in. So we wanted to set or take out the human element in regards to maintaining the, I would say, the peg as well as the underlying backing for each one of the tokens that we issue. And being able to connect into BitGo really allowed for us to be able to do that in a safe and secure manner.
Perfect. Okay, so question for the panel. USDA stablecoin uniquely brings together Cardano, Yoroi wallet, and Encryptus. How do these things create a distinct advantage over other stablecoins?
You go for that, or do you want me to go first?
I'll go for it.
All right. So I don't know if like you guys are as nerdy as I am and follow stablecoin news on a day-to-day basis, but I would say like in the last couple of weeks and couple of months, it seems to me like everyone and their mothers is issuing their own version of a stablecoin across multiple different chains. And they've all started to converge into, I would say, a very similar type of structure, which is what you see with USDC and what Paxos has been issuing, which is you take the cash in, you reinvest those into treasuries, you make your 4 to 5% yield on the back end of that, and it's predominantly focused on serving the DeFi ecosystem for these various chains. And so for us to launch a stablecoin, like how would we differentiate ourselves between all of these other issuers that are coming to market? And this is where our partnership or relationship with Encryptus comes in. So they have off-ramps to fiat in 80 different countries. So what we wanted to do is we didn't want to like have it be blockchain focused or have it be like, hey, look, like we're using blockchain as a buzzword in order to be able to sell a real world utility. Our thing was, what is a real world problem that first needs to be solved? And then how can blockchain actually fix that problem if blockchain is the right solution? So with USDA now, we're enabling anyone basically to get access to US dollars, hold their net worth in dollars, and then within 5 to 10 minutes be able to off-ramp to their local fiat. I know we can't do one right now, but Shantanu, if you guys come by the booth, can run a demo where we're off-ramping like ADA to Indian rupees within 30 seconds to 5 minutes. And this is at incredibly competitive rates. So like you're getting very close to interbank rates. And when we were running our little test on last week, like we're actually competitive or more competitive than a lot of the traditional remittance companies that currently exist, like TransferWise, Revolut, Remitly, MoneyGram. And that's due to the network in which Shantanu has been able to build for all of these off-ramps. So that's where we're trying to like set ourselves apart, with Yoroi being kind of like the consumer-facing side where you can manage your money on Yoroi. So if I wanted to, let's say, for example, send money over to Kenya, I can tokenize $10,000 basically for free within the US, send that over to a person in Kenya. All they have to do is download the Yoroi wallet and they can receive the funds. And then through the Encryptus off-ramps, within about 5 to 10 minutes, they can actually get access to Kenyan shillings. So they can then be able to interact with the local economy through their fiat without ever actually having to deal with the cumbersome problems that exist within the current financial infrastructure.
And just to add on here, Vineet, he has covered most of it, but the critical part for us from the day one was to make sure that the fiat liquidity must come from regulated and licensed financial institutions. So what we have done at the back end is we have integrated with banks and non-banking financial corporations who are regulated and licensed in the local jurisdictions in these 80 countries, which means when the fiat hits into the user's bank account, it's coming from the clean source. Uh, this was one of many challenges that we wanted to solve specifically around the P2P side of the business. And as Vineet clearly described, for us, blockchain is the underlying technology which we have integrated with the combination of Cardano, Euro, and USDA. So think about it. In fact, just last night I posted this non-custodial wallet, which is Euro, with a combination of blockchain, which is Cardano. The users are able to send remittances via encryptors in a seamless manner, which means we have taken away a lot of intermediaries who actually add cost at every single step. With us, integrating directly with the last mile distribution partners actually makes it less cumbersome for the users. In addition to this, the core focus at Encryptus was also to make sure the liquidity is available at a fair price in the frontier markets, which has not been the case. So we do not compete with the P2P players, but we compete with the traditional players who are offering these payment services in a $6 trillion market cap industry at 6.35. I mean, these are not my numbers. These are World Bank numbers. The average cost of sending remittance is about 6.35%. So the amount of saving that we can bring by the combination of blockchain and with our stablecoin, can, that's where the potential really lies, in our opinion.
So I really want to touch upon that part about the regulation. So Anzens is a regulation first approach, right? You take a regulation first approach. How does that impact like the development roadmap as you see it?
I mean, just to take a step back and also to just mention more about what we do at Encryptus, we are regulated and licensed and authorized for cryptos, fiat, and remittances in several countries. With Anzens, the approach was pretty straightforward as well. We have already obtained the MSBs under FinCEN and in the process of getting our MTLs in place before we get the launch. We have obtained and still obtaining additional no objection letters in the US. Uh, that's on the licensing side. On the compliance side, anything that comes in which is in the form of fiat, so we have got the fiat monitoring tools in place. On the token side of things, we have got the KYT tools in place, which means wallet monitoring and the token monitoring. It's mandatory for the users to actually come in, whether they are minting or burning the crypto assets. In addition to this, we have a level of compliance through KYC, KYB. So of course, we have got the BitGo processes at the back end. So we have two layers of defense even at the KYC level. Number one is the Anzens level of onboarding, wherein we are making sure that the users who come on board with us, they are clean, the UBOs are identified if it's a business. We pass on this information to BitGo, wherein BitGo is validating that information again. Again, it may sound like a very cumbersome process, but it's all driven by APIs at the back end. And these are a multi-layer of checks and balances in place to make sure it's fully governed. If you guys want to add anything more to this.
No, I think you covered it really well.
Okay, perfect. I got a question for you, Tyler.
All right, I'm ready.
Here we go. So, in the past week, the liquid finance community introduced a governance proposal to support USDA lending and borrowing on their platform. How do you envision this integration influencing USDA's role in driving DeFi growth on Cardano?
Well, I think it's excellent to have an opportunity to be on the Liquid platform. It'd be great to have USDA positioned as an asset that you can either borrow against or lend against. So I think that's a great first step in DeFi. But I kind of want to go back to what Vineet and Shantanu were touching on about remittances. If you look at stablecoins historically, they've always been a tool that kind of helps the crypto ecosystem in which they exist. So you're solving a problem for the crypto ecosystem. You're trying to create an opportunity for liquidity. You're trying to create a stable asset to trade against rather than trading against like ADA versus Cardano native asset, which is two volatile assets. But what we're doing, instead of trying to target that smaller market, we're creating an opportunity to target the much larger market, which is the remittance market. And by targeting the remittance market, we're creating an environment where we're actually solving a real world problem. We're bringing users that might not be interested in crypto. They're just interested in moving money quickly and affordably. And we're doing that better than traditional players in the industry. So by default, they come to us, they move their money quickly, they learn about crypto, they learn about ADA, they learn about Cardano, they learn about all the DeFi protocols that exist here, and it's a stepping stone where you solve your problem. By solving your problem, you learn about the ecosystem, and then you find these opportunities in the ecosystem. You find the opportunities on Fluid, you find the opportunities on liquid finance, and then you take advantage of that. So what we're doing is we're solving that real-world utility, bringing people into the ecosystem by doing that, and then presenting these new opportunities within Cardano DeFi.
One thing that I'd actually like to add, and I think Tyler really made an excellent point, which is bringing people outside of the ecosystem. And I just have an example for that with the Yoroi wallet now. We are offering direct ADA to fiat off ramps in the 80 countries that Encryptus currently supports. And I've actually have friends that have nothing to do with crypto, downloading Yoroi, purchasing ADA, because it's for them right now one of the cheapest ways for them to get their money into other countries. So for example, we can hit hard to reach countries that are even difficult to get to through traditional bank wires at a affordable rate, such as India, Pakistan, China, South Korea. These are countries that traditionally people see as being problematic in order to be able to get into. But through Encryptus and their licensed partners, we can actually do that at basically nearest makes no difference interbank rates. And that's starting to bring a lot more attention towards Yoroi and also towards Cardano, where it's people are just this is the best way to do something. They don't really care if it's crypto or not, and that we believe can be a boon to the entire ecosystem.
Okay, great. So let's talk about it a little bit more, because you guys have talked about a lot of differentiators, but there just seems to be every day someone's spinning up a stable coin, but longevity is really hard. So, what are the easy aspects of launching a stable coin, and what are the challenging parts of that?
I would say the biggest challenge with launching a stable coin is just the amount of regulatory hurdles that you have to cross in order to be able to get everything set up. If you guys come by my master class afterwards, where we kind of go through what the tokenization pyramid looks like, there's components that you have to put into place that a lot of people that I would say have not spent enough time in the tokenization world or within fintech fail to fully grasp. Because kind of what I mentioned earlier, people are like, oh, look, there's an asset, we can tokenize it, and then you get access to instant liquidity. But that's not how it actually works when you're setting this up. And it's actually a large and arduous process of how do you do reconciliations? How do you do reporting? How do you do the asset management? How do you ensure that the peg is actually maintained? And those are actually even still some of the easier components. The harder ones are then, how do you explain to regulators that your stablecoin is actually safe and secure and you fit within the schemas? And especially when they're changing their regulations on a, let's say, month by month or year by year basis, you always have to kind of skate to where the puck is going to be from a regulatory standpoint. So for us, we've spent so much time going through and mapping out each one of these components, from how do we have to set up the technology, how are we going to go through and get our SOC audits done? Because at the end of the day, we intend to be banking grade. And so it's there's an entire process that's around that. There's an entire process around liquidity management on what's backing your stable coins. Then there's the AML and KYC. And then there's also unique elements within the Cardano ecosystem that are both, benefits, but there's also slight drawbacks that exist just due to lack of infrastructure that exists, let's say with integrations with Fireblocks. They don't support Cardano native assets. So we have to build our own versions of certain solutions in order to be able to get this up and off the ground. So I would say the hardest problem, or the hardest challenge, is there's just so many different components, and once you start to dig into them, you realize that they're their own icebergs in and of themselves. And then getting all of this to come together to deliver one cohesive product is what we're this close to being able to achieve. But it's been quite the effort.
And just to add on, Vineet, you touched upon compliances. If you remember, when we were initially finding out the best jurisdiction, one of the advice that we got was to launch a stablecoin outside of the US. But we were we want to be in the US because we want to run a business that's for long term. The stablecoin market cap is almost 171 billion dollars right now, which is predominantly dominated by USDT and USDC. And if you look at the list, I think there are about 200 stable coins out there today. What I see as a challenge is everybody is doing what USDT and USDC have been predominantly doing. And this is where I guess the problem is. If you try to achieve what USDT and USDC did, USDT launched about 10 years ago. They are in a very, very different league, and they are go-to stablecoin whoever is entering into the crypto ecosystem. But the question that we keep discussing all the time is why is it that the crypto market uh, is not thinking to have a stable coin which also empower other industries? Settlement is the name of stablecoin and how this can be used. Um, Recently I was reading about uh, PayPal's USD stablecoin. A $1 billion market cap came down to 600 million. So until August or something, they had a $1 billion market cap, which came down to $600 million. One of the reasons is the reliance on crypto ecosystem. So until and unless projects and companies do not think beyond, we will be doing the same mistakes as others. And for USDA, we use the past few months to understand where do we find the niche, what is the problem that we really need to solve, and how do we solve the problem step by step.
Sounds like utility is the name of the game. But it's clear also that wallets play a very big role in enabling that access to stablecoins. What innovations can we expect from Yoroi Wallet or other Cardano wallets? What would you like to see on the wallet side to continue enabling user experiences with stablecoins?
I think the key to getting more people into stablecoins actually just purely comes down to ease of accessibility and user experience at the end of the day. So, like right now, like we about a year and a half ago, our business development team did a deal with a exchange in Thailand called BitCo. And they're the largest exchange in Thailand. Like compared to, let's say, Coinbase or Binance, they don't move that much money. But like when you actually look through their books, their biggest trading pair actually has nothing to do with crypto. It's Thai baht to USDT. There's a tremendous demand for dollars in a lot of these emerging markets because like you can protect or hedge yourself against currency debasement. But the issue that comes from a lot of this is you have to go through an exchange, you have to get a wallet set up, you have to do all of these other things. And so our goal for Yoroi is to make this as easy as possible for you to be able to set up an account. You can keep your anonymous Yoroi account if you'd like to and continue just participating in the DeFi world. But if you'd like to move over into, let's say, this intermesh between TradFi and DeFi, all you have to do is go through AML and KYC. We can get you access to a segregated account at BitGo, so you get access to traditional finance rails. You get access through the Encryptus off-ramps. And so our thing is just to make it so that anyone, anywhere in the world can download the Yoroi app and then basically choose what level of AML and KYC they want to go through, quickly and easily be able to convert or purchase USDA stablecoins or even cryptocurrencies, and then be able to off-ramp them. And so, like, that's where I think just having a good unified package. I don't know if you guys have recently downloaded Yoroi, but we're very proud of our most recent update because it's finally at a point where it's like, this is actually looking really good. And so, like, that's a lot of the work that we're doing behind the scenes on the Yoroi and the wallet front in regards to getting ourselves ready for this push more so into traditional finance.
Perfect. Sounds like we'll be really ready. But let's talk about some use cases, Tyler, in particularly Treasury and Reserve Management. How will that benefit like Cardano projects?
Yeah, so like let's say you're a Cardano project and you receive some funding from Catalyst. Right now, you receive all of that in ADA. ADA, if it's a bull market, that's great because then your treasury is growing very quickly and everyone's happy. But as soon as there's a drop in that, then it's like half of your treasury is gone in value. Your burn rate's still the same, but your executing your roadmap becomes much more difficult because you have half the funds that you had planned for and you can't execute. So what projects can do is they can allocate all of that to USDA if they want to have a very stable treasury because you know exactly what it is. You can kind of plan out what you're going to do, how much it's going to cost. If you want to kind of balance it out between ADA, your Cardano native asset, and USDA, you could do that. But it just gives you options depending on what your risk profile is as a project owner to move forward. So then if through Yodora even, with our integration with our off-ramp, something else you could do is if you need to do payroll, if you need to pay contractors in different regions of the world, you can have your treasury all there. Then you can off-ramp in different currencies in different parts of the world very quickly to make sure that your contractors are paid. And you can receive that in USDA, you can receive that in ADA, you can receive that in their native fiat currency. So lots of utility, lots of more just flexibility in how you manage your projects as founders in the Cardano ecosystem. So definitely looking forward to seeing how it all plays out.
And let's keep on the topic of like use cases, right? So I know that when we think about stablecoins in the U.S. side, we think about hedging and trading, but there are regions, and particularly let's talk about the frontier markets where they're utilizing stablecoins as maybe a hedge against their local currencies. How does USDA impact financial inclusion?
Uh, Actually, one of the key points that Vineet mentioned earlier during our talk is you have the ability to hold your USDA, and it's within your control as to when you would like to convert it into fiat currency. So, with the integration of, as I said, blockchain and fiat together, it makes a wonderful combination, specifically in the frontier markets. Uh, Fair pricing is something that we have always envisioned. In the early days, since I got into cryptos, I've seen like Bitcoins being sold for 10, 12, 15% premium in the frontier markets. And the whole concept of blockchain, specifically Bitcoin, was to eradicate that problem, to get away from that problem. But looks like we are still stuck in that circle even after 8 years of being in this space and still hearing the same challenges. Uh, Let's look at some numbers. The largest remittance market in the world is India. India received about $111 billion in payments globally. Now, the majority of these payments are sent via banks, which consume the SWIFT rails, which is extremely expensive, and I don't have to go through the list of disadvantages that they get with SWIFT or with the remittance markets. The way we are looking at is not just the off-ramping part of the business into India, but also integrations with local exchanges, OTC desks, so that the users are able to get access to USDA with local INR on-ramps, and then the ability for them to convert the USDA to off-ramps. So I guess with the combination of all of this, it will make a wonderful combination in the frontier markets.
Thank you. And I know we're out of time, but just to wrap it up, is there any call to action to communities or partners that you would want to work with? How can they get in touch with you?
Yeah, like I would say, like if you guys are interested in what you heard, feel free to come by the booth, try out our off ramps. We're fully live at this point in time, and if you guys have a project that you think can benefit from the implementation of a stablecoin, we would love to chat with you guys in regards to how we can work together, how we can integrate with you in order to be able to accelerate your product. So yeah, come by and say hi, and thanks guys for listening.
Thank you.
Thank you,
you.
everyone.
Thank
Bye.
you.